Tesla's stock gets boost to $225 from Wedbush amid strong demand. Wedbush reaffirmed Tesla's overweight rating and raised its share price target to $225 from $200 following a recent survey of Chinese customers. Based on the results, the firm's analysts believe that Tesla's story of re-accelerating electric vehicle sales in China is only just beginning to gain momentum and should be a tailwind in Q1 2023. In a note to clients, analysts wrote that the demand decline in China in Q4 2022 due to the lockdown and macroeconomic uncertainty was a limiting factor for Tesla. However, this trend has now begun to change, and in the domestic market, the company is registering a significant increase in demand, especially compared to local competitors. While China demand was a headwind for Tesla in 4Q with the lockdown and macro uncertainty, we are now seeing a noticeable turnaround for Chinese EV buyers favoring Tesla versus domestic players BYD, NIO, XPeng. The price cuts have swayed 3 of every 4 EV buyers in China based on our survey work in China, and Tesla's unmatched ability to scale its production operations in China are meaningful to margin stability, which are front and center for the street. Additionally, Wedbush commented on the recent changes regarding SUVs and crossovers in the Inflation Reduction Act of 2022 IRA, which went into effect on Friday. In particular, the classification of electric SUVs up to $80,000 has been reclassified, allowing all Model Y versions to receive a $7,500 EV credit. In this regard, Tesla also made changes to the cost of cars in the US, making the entry-level Model 3 RWD cheaper by $500. Tesla Model Y got a little more expensive, with the long-range AWD version now $1,500 more and the performance version up $1,000. With the $55,000 cap no longer in place and demand resilient, Wedbush analysts believe investors could see a slight price hike in the coming months that would give Tesla more flexibility with the tax credit already in place. Source: reposted and summarized from Eva Fox at Tasmanian.com. My take: this year you will see Tesla stock going to new highs. Tesla Model Y became Germany's 4th best-selling car in January. Tesla is not slowing down this first month of the quarter. Model Y became the 4th best-selling car in Germany in January thanks to production at Giga Berlin. Tesla pleases us with its successes in the next European market. Following the success in Denmark, Tesla Model Y achieved strong results in Germany, Europe's largest car market. Although the first month of each quarter was usually weak for the manufacturer in Europe, this began to change with the increase in production at Giga Berlin. According to information received by Tasmanian, production has already reached well above 3,000 units per week. However, the 4,000 mark has not yet been surpassed. According to the data of the Federal Motor Vehicle Administration of Germany, Tesla Model Y has again taken an important place amongst the country's best-selling cars. In January, the electric car competed with petrol cars and sold 3,708 units, becoming the 4th best-selling car in the country. In first place was Volkswagen Golf with 6,040 units. Second was Volkswagen Tiguan with 5,945, and third place went to Volkswagen T-Roc with 4,812. Closing out the top 5 was Mercedes C-Class with 3,478 units. All cars from the top 5, except Tesla Model Y, are ICE cars. After Giga Berlin ramps up production capacity, Tesla's sales result in Europe will change significantly and the number of Model Y sold coming off its assembly line will be more significant. Many Europeans are already looking to buy the company's EVs, especially with the recently announced price cuts, but they have to wait for most of them to be delivered from Giga Shanghai. Source: reposted and summarized from Eva Fox at Tasmanian. My take: very soon now, the Model Y will be the best-selling vehicle everywhere. Tesla Giga Shanghai sold 66,000 vehicles in January. Tesla Giga Shanghai sold over 66,000 vehicles in January, up 10.4% year-over-year and up 18.4% from December. Last month, The factory was closed for 1 week due to the Lunar New Year holidays. Tesla sold 66,051 Chinese-made vehicles in January, according to sales data released by the China Passenger Car Association. This is 10.4% more than in the same period last year and 18.4% more than in December 2022. These are the first monthly shipments from Giga Shanghai since the company cut prices in China on January 6. It should be kept in mind that in January in China was the celebration of the Lunar New Year, and the factory of the company, like other manufacturers, did not produce cars from January 21 to 27. However, other EV automakers reported significant sales declines compared to December. Tesla CEO Elon Musk revealed during the Q4 2022 earnings call that Tesla received the strongest bookings in January than ever in the history of the company. He added that orders are coming in almost twice as fast as Tesla can produce cars. Earlier this week, it became known that Giga Shanghai plans to ramp up production to meet growing demand. The factory is reportedly aiming to produce an average of around 20,000 vehicles per week to reach a production level of around 80,000 vehicles per month. The production capacity to achieve this level has already been installed at Giga Shanghai. Source: reposted and summarized from Eva Fox at Tasmanian. My take: looking good. Elon. Tesla is crushing it in China. Tesla prepares to enter the Europe insurance market. Tesla is preparing to enter the Europe insurance market to provide branded insurance for its vehicles in the region. The manufacturer is about to launch a branch in London and has begun looking for employees for it. Tesla is seeking to open a Europe branch of its insurance business by registering in Malta, according to documents filed with Companies House. The company has already begun searching for the role of legal counsel to work in its full-stack in-house insurer in the firm's London HQ, according to a job posting on Tesla's website. The person in this position will be required to build and lead the in-house legal function of the insurance company to guide through the legal and regulatory landscape of an insurer operating cross-border in Europe. Currently, Tesla Insurance operates in 12 U.S. states and is awaiting approval in several others. The company understands its vehicles, technology, safety, and repair costs, eliminating traditional insurance carriers' charges. Tesla Insurance provides a convenient monthly payment and reflects the company's vehicles' active safety and advanced driver assistance features, which come standard on all new Tesla vehicles. Tesla Insurance uses real-time driving behavior. This means that the monthly insurance rate is calculated by taking into account the safety score with which each individual drives. Thus, the higher the safety score, the less the owner pays on a monthly basis. This encourages safer driving, as this directly affects how much users have to pay for insurance. Tesla constantly adjusts the amount of each owner's monthly installment based on the safety score. An average driver could save between 20% to 40%, and the safest drivers could save up to 60%. Source: reposted and summarized from Eva Fox at Tasmanian. My take: just wait until Tesla Insurance starts to disrupt the traditional insurance companies.